We still don't have James. We might have to start this with just the two of you.
I'll put myself on mute. I'll give.
Okay, here we go. Good morning, ladies and gentlemen. I'm delighted to welcome you to this webinar, which we're doing in collaboration with DLA Piper on power purchase agreements by corporates in the UK and Europe and the opportunities for companies in China. We're just going to wait a couple more seconds while our attendees filter through. My name is James Brodie. I'm the Commercial Director for Industrial Economy at the China-Britain Business Council, and I'm joined this morning by, I'll soon be joined by 3 experts, whilst our third expert joins us. But for the time being, we already have two of our premium members from DLA Piper, Natasha, and from EY we've got Phil, and our third expert has just joined us, James Rook from City of London Corporation. So we're going to run this morning's session and this afternoon session, if you're joining us from China, as a moderated panel discussion. We will have a few slides being presented, but largely we're going to have this as a interactive discussion, and I would encourage everyone to use the Q&A button on their screen to ask any questions. You can ask them in English or in Chinese, and we will endeavour to discuss those questions and hopefully give you some answers too. This is a webinar in a series of activities that CBBC is running in the build-up to COP26 later this year around the green agenda, and the use of power purchase agreements in Europe has been crucial for ensuring the viability for a lot of renewable projects that have been coming online in the last few years. And before we delve into that discussion in greater detail, I'd just like to offer a chance for our panelists to introduce themselves. So first over to you, Natasha.
Thank you, James. My name's Natasha Luther-Jones. I'm the global head of the energy sector at DLA Piper. DLA Piper's a global business law firm.
Thank you. And you, Phil?
Hello, everyone. Good to meet you. Yeah, my name's Phil Dominy. I'm a director in the corporate finance, energy and infrastructure team at EY, or otherwise known as Ernst & Young, based in London, working with corporates on renewable energy strategies and power purchase agreements. Thanks, James. And
finally, over to you, James.
Hello, I'm James Rook, Head of Energy and Sustainability for the City of London. So I'm leading our net zero carbon programme. The city recently signed a PPA where I've been working with both DLA, Natasha, and EY.
Excellent. Now, now you know who's in the panel. I would like to ask that question, exactly what it is that we're talking about. Okay, power purchase agreements, PPAs. We hear the acronym a lot. It's somewhat of a buzzword, and I think especially in Europe and North America, has been used a great deal, especially the corporate PPAs that we're talking about in recent years. In China, I think it's a much more nascent picture, but just to set the scene exactly what a corporate PPA is, I'd like to invite Natasha to share your own expertise in that area, and I think you have some slides, so if you'd like to share your screen, Natasha, and then take us through the basics of what it is we're talking about.
I just need the participant who's currently sharing to stop.
Okay. That's great. Thanks, Natasha.
Great. Okay. Well, thank you very much. I think if everyone can go on mute, yep, that's great. So I have a few slides which outline a little bit more information around what are corporate power purchase agreements. So in essence, a corporate power purchase agreement is a contractual arrangement whereby a corporate entity enters into a direct contract with a renewable energy developer. So they're contracting directly with wind farms or solar facilities. And this means that if it wasn't for the benefit of that contract, the wind farm and solar facilities can't be built, because as you're aware, the subsidies have fallen away from renewable energy in many jurisdictions, and therefore these direct contractual arrangements are required in order for investors to invest in the building and operating of the corporate power of the generator facility, and then for lenders to lend to them as well. There are a number of different structures that are put in place which are called corporate power purchase agreements. And I've got a couple of slides showing you those structures. But before we get into the detail, we just wanted to highlight the background of DLA's involvement in corporate power purchase agreements. As James mentioned, it's a mature market in Europe and the UK, and DLA Piper have been involved in these corporate power purchase agreements from around 2010 in the UK. We worked on the first ever corporate power purchase agreement to be done in the Nordics. It was also Google's first corporate power purchase agreement outside of the US. Since then, we've worked across jurisdictions, and as you can see on the slides, we've specified some of the jurisdictions we've worked in, and latterly we are seeing corporate power purchase agreements now expand into Asia, having been quite successful in Australia. There are a number of different roles that you can have when you're negotiating a corporate power purchase agreement. You can act for the owner of the wind farm or the solar facility. You can act for the lenders lending money to them, or you can act for the corporate off-taker, which is what we did for City of London, and James is going to be telling you more about that transaction. So, what is a corporate power purchase agreement? Now, there are two key structures put in place, and one of them is called a physical corporate power purchase agreement, and the other structure is a synthetic, a financial, a virtual PPA. So there's a number of different names put for the same PPA. So this slide describes what is a physical or a sleeved corporate PPA. These PPAs have been largely modelled on the PPAs that utilities provide to generators across Europe. This PPA is a contract between the generator and the corporate, whereby actually the power from that facility is bought by the corporate, along with the guarantees of origin, the renewable certificates, so the proof that this electricity that's generated is green. Now, it's not possible in many jurisdictions for a corporate to buy directly the power, because you have to have a license to be able to supply power, and neither the generator or the corporate would have such a license. There's a long process and a lot of regulatory requirements around becoming what's known as a licensed supplier. Therefore, the corporate has to enter into an arrangement also with a licensed supplier, and that licensed supplier effectively sleeves, it wraps the power that's being sold by the generator to the corporate, and therefore complying with the regulatory requirements. I have a diagram next which may be easier to understand as well. So as I explained, you have that direct power purchase agreement between the generator and the corporate, and then you have the arrangements with the corporate off-taker and the licensed supplier. This structure has been the dominant structure used in the UK and in the Nordics. We now come to a structure which has a number of different names. So here we've called it a synthetic PPA. You often hear the word virtual PPA, a financial PPA. They're all the same thing. And this is also CFD, which means contract for difference. Now, this is a direct arrangement between the generator and the corporate off-taker, but they are not buying the power, the electricity. So there's no transfer and sale of the electricity produced, but there is a direct contractual arrangement between them. The only purchase under this contract relates to those certificates I mentioned earlier. So the renewable energy certificates in mainland Europe, these are known as guarantees of origin. In the UK, they're known as REGOs, and that is the only thing that transfers under that contract. Now, the purpose of the contract is, again, to enable the generator to be able to build a solar or a wind facility when it doesn't have the benefit of a subsidy. So it needs certainty over price. So this contract for difference gives that certainty. So when the price the generator has received is lower than the strike price, the corporate will pay a top up to the generator. When the price the generator has received is higher than the strike price, the generator pays the corporate the difference. And that is essentially is what it does. Now, I also have a slide here. There's another point to raise around these synthetic PPAs. There are increased regulatory requirements around these because they're what are known as a financial instrument. So there is an additional layer of complexity, but we will talk about why you might want to enter into a synthetic or virtual PPA as part of our panel discussions. Now, I've talked about there being two types of corporate PPAs. Those two corporate PPAs I've described, so the physical and the financial, are both what are known as off-site PPAs. Now, there is another type of PPA, which is called the private wire PPA. It might also be referred to as the direct PPA or on-site. And this is where the generator's facility has a physical connection to the corporate off-taker. So what we mean is the corporate actually uses the power that's generated by that facility on site. So there's a direct wire, a private wire between the generator's facility and the corporate off-taker. So when you're These are clearly much smaller size PPAs. The off-site PPAs tend to be much larger. The generator also has the ability, usually, to sell any unused electricity through the corporate's grid connection. This is usually entered into in parallel with a lease of land between the corporate and the generator. And sometimes those renewable energy certificates that I mentioned, sometimes they also are transferred. However, because renewable energy is, the price of production of renewable energy is falling and it's competitive now with other electricity sources, sometimes the corporates do it and enter into private wire PPAs, not for wanting to be sustainable and wanting to meet their sustainability objectives, but sometimes they just do it because it's a secure source of power that they can rely on, they have control over it, and it's a competitive price. And I have a diagram there also, which hopefully helps explain it. As you can see, the PPA between the generator and the off-taker, and access to the grid for the generator via the corporate's route to the grid. James, that was my slide deck, but I'm happy to take any questions as part of the discussion, which I'm sure Phil and James can also do. So I will now stop sharing.
Thanks, Natasha. I think that's a really useful introduction for anyone who's not so familiar with the topic. I wanted to bring Phil into the discussion just straight off the back of that to talk about what kind of scale. And Natasha at the end mentioned that the private wire PPAs were of a smaller scale than the virtual ones, generally speaking. But what kind of scale are we talking about, Phil, here?
Yes, the scale varies hugely, actually. So the two first types of structures that Natasha mentioned, so the sort of physical and virtual structures are, she said, typically off-site because they are utility scale. They are typically, for corporates, they are on average between about, say, 50 and 200 gigawatt hours per year. So, whereas on site, you're probably looking an order of magnitude less than that, so probably around 5 to 10 gigawatt hours per year. So it does vary hugely in sort of volume terms. I think also in terms of how long, so not just sort of how big, but how long they sort of vary as well. So with the sort of the private wire PPAs, because they're sort of in very much sort of attached to a site, there's a bit of what they call stranded asset risk. So if the plant was to die, in effect, that generator, would find it difficult potentially to export the power. So typically the PPAs for private wire are longer. So on site, you probably see up to 20 years, maybe even longer, 25 years to get the best power price. Whereas off-site PPAs, it varies quite a lot, actually. So most we're seeing at around 10 to 15 year mark. And that is, as Natasha was describing earlier, that enables a new plant to be built, basically. It provides additionality and it gives enough time, basically, for the developer to sort of pay off debts and loans on the initial sort of capital expenditure on the project. You can get PPAs for shorter periods than that, say 5 to 7 years. I've done one of just 7 years. I mean, it's typically of projects that are operational. When you get shorter term PPA lengths like that, they tend to be projects that are already built, and the corporate is just sort of signing up to sort of continuing their life. So in sustainability terms, probably a less strong message. I mean, still, it's still very important to buy renewable power that already is generating, but it's not sort of bringing new capacity onto the grid. So there's a big variation in terms of what we call the tenor of the PPA, how long the PPA is, from as short as 5 years up to maybe 25 years for a private wire. and a big range in volumes. I say the typical volume that we see is about 50 to 100. In fact, the smallest volume PPA I've done is for EY itself in the UK. So we did our own PPA last year, and it was for only 13 gigawatt hours. So 13 gigawatt hours. But that's because we felt it was the right thing to do. It enabled a new solar project to be built in the UK as a result of that 10-year commitment. And we worked with DLA on that. It was a very exciting project, actually. Up to working with some mining and metals companies now, and they're looking at 500 gigawatt hours, even a terawatt hour. So it varies hugely. I know there've been some very large deals in the Nordics with sort of aluminium companies and the likes, where their consumption is so large. So from the very small to the very large, PPAs can span quite a broad range.
And of the three types that Natasha introduced us to there, has there been, were there more of the physical PPAs in our earlier days, and it's only recently that we've got into these financial PPAs, or have all three types always existed?
Yes, exactly. It's an interesting journey, actually, because certainly in the sort of UK and Europe, most PPAs started off in that sort of physical or sleeved variety. As Natasha said, it was a sort of, they were most similar to the previous utility, sort of standard utility PPAs, where you buy the power and the attributes, the renewable attributes with them. And I would say probably, I started doing PPAs, my first one in the UK was 2014, and probably up until about 2018, all the PPAs I did were physical. Since then, it's almost completely flipped the other way. And so probably 80% of the PPAs I do now are virtual. It's partly a sort of trend that's come across the pond, as it were, from the US. Virtual PPAs are very popular in the US because it has a very disaggregated grid system in the US, and it's a way of sort of aggregating load from many different parts of the US. You could use a virtual PPA. And also now we're seeing that similar trend in Europe, where corporates can aggregate sort of power consumption from several different countries in a virtual PPA. With a sleeve PPA, it's more difficult. There are pros and cons of either, so it's never always going to be a virtual PPA. With a physical PPA, the benefits are certainly price security. You're paying an absolutely sort of fixed amount typically. There's simpler accounting treatment, which is something that Natasha touched on as well. And I think a lot of people sort of value that sort of form of simplicity and straightforward structure. They can visualize it, as it were. Having said that, the virtual PPA, I would have said, is actually simpler in many respects for a corporate, because it's just one contract with the developer, as opposed in a sleeved PPA. Sleeved PPA is sometimes called back-to-back, because you have the corporate has an agreement with the developer, but also another one with the utility, which will then sleeve the power through. So sleeve PPAs are more complex in that, and I think the beauty, as I say, with the virtual PPA is it's very flexible in terms of volume, because you're not actually buying all the physical power. So your own sort of consumption can vary more without having a direct impact on the power coming from the generator. So pros and cons with each, to be honest, James. But I think the trend definitely is towards more virtual PPAs, where the accounting treatment works for the corporate.
James, could I maybe just add to what Phil has said? Is that okay?
Of course.
There's on the virtual side also, the benefit of that is if you're not as an entity responsible for your own procurement of power. So if you're in landlord premises like EYR and like DLA are, so we don't own those assets and our landlord is procuring the power for us, actually a virtual PPA means we can still enter into a corporate power purchase agreement. I also thought Jennifer said to me that we needed to explain the acronyms, because this area is full of lots of terminology that people throw around, and I think it's probably worthwhile just picking up on one of them that Phil mentioned to make sure we're clear about it, and that's additionality. So additionality is a term that's used quite widely, and in simple terms, what it means is if it wasn't for the corporate power purchase agreement, the wind farm or solar facility wouldn't have been built. So by entering into the PPA and giving the price security, you are bringing new renewable power onto the grid.
Exactly.
Thanks.
Yeah.
Thanks for adding that, Natasha. I think that's a key consideration for a corporate looking at using a PPA. That might well be one of the drivers, is as you say, to enhance their green credentials and to be able to justifiably they have their investment has brought about extra capacity onto the grid. So using that as a segue, I wonder if we could bring James into the conversation. We've heard some of the considerations that a corporate or a consumer, and the City of London in this instance is a consumer, albeit a government body. I wonder what one of those three types of PPA it was that the City of London has entered into, and if you could just talk us through some of your own considerations when embarking upon this. Over to you, James. You could just unmute yourself. Thanks. Do we have you, James? We can see your screen. If you can make it full screen.
Sorry,
yeah,
guys,
you're off.
Just struggling with the mute button. Apologies. So hopefully you can see my screen now. Is that sharing? Great. So yeah, just to give you a quick overview of what our PPA is, and then I'll kind of talk you through the process that took us on that journey. So we've recently signed the PPA. It's a physical PPA, and I'll talk a little bit more about that later. So that's signed in February 2021. It's a 50 megawatt installation, so 95,000 panels, and that provides roughly 50% of our power demand in the City of London. So for us as a corporate, it's quite a significant contribution to our energy requirements. So this just sort of describes the thought process that took us down the PPA route when we started looking at it. So for our energy requirements, we were really looking for three things. We wanted it to be cheap, we wanted a cost advantage, so we wanted something that was commercially attractive to the organisation. We were also in a period of extreme volatility in terms of energy commodity prices, so very high levels of unpredictability in the market. So we wanted to kind of decouple ourselves from that risk and have a much sort of flatter and predictable cost profile. And we're also in the midst of a climate emergency, so we wanted to make a real material and public commitment to investing in renewable energy, and importantly referring back to that word additionality, so to show and deliver some real additionality, so to show that our investment was providing new infrastructure in the UK. So we felt that those three things were really served best by a power purchase agreement, and that steered us towards very much a physical PPA. So we did look at the other options. So as someone in a city centre, a local private wire PPA was impractical for us because we're trying to cram things into sort of building rooftops. We didn't have the area. And a virtual one we felt was an option, but didn't give us that kind of additionality, that new contribution to infrastructure. So that's kind of what led us to the route. Pick any one really, and I suppose that from a corporate profile, I think those are probably the three factors that decide your route and whether it works for you. But that is the process we went. It's probably reflective of the thought process of other as well, in the UK. But ultimately, for us to get this through the organisation to make it attractive, we had to make it work financially. So we looked at a net present value. We wanted to work over in this case, a 15-year term. importantly, we wanted to make it work from year one so that our project was never in deficit. So we did some modelling with assistance of EY, and then later on with the contractual advice as our legal advisors, and we built up a model. So we looked at a 15-year price forecast for the UK, and then we looked at the deal that was on the table with various suppliers to identify what the value of that project was from year one onwards. Because there's some uncertainty in the market, we took the most pessimistic view, the lowest scenario, and that gave us a net present value of about £3 million with that bit cash positive year one. So financially, very attractive project for us, and that helped us then push through the environmental credentials with that as well. But this was a great benefit to us in helping us sell this to our corporate board. Now, since then, we've updated those prices. We think that that value is probably double that. So for us, it's it's filled all of those goals. It's given us a price advantage, a financial benefit. It's given us cost certainty at that 15-year term, and it's given us a lot of the environmental benefits that that we can talk about publicly as well, which is incredible. So that's our kind of corporate view. So happy to take any questions now or later.
Thanks, James. Are you familiar with other cities that have engaged in corporate PPAs in this manner, either in the UK or elsewhere in Europe? Did you talk to them in advance of doing this yourself?
It's although the PPA market in the UK is, sorry, there's a lot of feedback there. Is the PPA in the market in the UK market is fairly well established, but historically that's been with private sector corporates. So we were one of the first cities, one of the first public sector to do that. So we did quite a lot of market consultation, both with suppliers and end users. But now, as a city, as a public entity, we're one of the first in.
Great stuff. I think we've got a good understanding from both from a user's perspective as well as just the overall picture's been painted of what a corporate PPA is. Moving along to China, which is what has brought us together today. Have any of you been familiar with much of this activity going on in China yet? Natasha or Phil?
Maybe. I think to date there have been a number of private wire PPAs. They've definitely been quite common, and they've been undertaken by some large corporates over the last 10 years. So I think that the private wire PPAs have been most common.
And yeah, from my perspective, we've been helping a corporate in China with their on-site solar installations. First one went live last September, which is very exciting, and they're gradually growing their portfolio of rooftop and adjacent land sites. And literally just in the last few weeks, we've been talking with potentially a new off-site PPA arrangement in the Greater Bay Area, so southern China, as to a potentially new way of structuring an off-site PPA. Still fairly early days, but seems to be lots of appetite amongst corporates who've got operations in China to do something at scale. Because as Tasha mentioned earlier, the private wire and on-site only achieve a sort of relatively small scale, so you really need to go off-site to get a big chunk of your consumption covered.
Yeah, I mean, I understand it's very much part of China's power market reform plan that there'll be a much greater level of marketization of this sort, and I think it's there's quite a lot of autonomy at the provincial level, and so there's also quite a lot of variety as to how liberalized each of the provincial grids have become, but there are provincial level power exchange centres have been established. And you mentioned the Greater Bay Area. I think Guangdong is the furthest forward in developing that, but there's still no kind of spot market in existence for that could be used for renewables so far. So there's certainly some still some restrictions to be making some of certainly the financial PPAs possible at this stage. We've got a question through the Q&A there from Charles Jang asking, in the UK context, is the price stabilisation function of PPAs contradictory with the government's contract for difference feed-in support scheme?
Should I start on that one? Yep. Okay. Yeah. Very good question. Yeah, the projects that certainly Tasha and I are advising on in the UK market are what we call merchant projects. So they are onshore wind and solar PV projects that are operating without the government's contract for difference subsidy. So that's subsidy in the UK is available as an auction. So developers have to bid in to auctions, and they get this sort of elevated sort of strike price that enables them to be competitive. But just recently now that's being extended to sort of onshore wind and solar PV. So it could change the corporate PPA dynamic because to date, as I say, those technologies haven't been able to have a government subsidy since about 2017, when the renewable obligation certificate, the ROC subsidy, ended. So yes, a project that already has a CFD from the government doesn't really need the corporate PPA because it's already got that sort of price security in it. But I don't know, James or Sasha, you might want to throw something in on that.
Yeah, and just to pick up on that, I should say that the cost certainty, the fixed price element, was something my organisation in particular wanted for stability, but it's by no means obligatory or a standardised thing in the market. So there is the facility to either have a fixed price and link that to an inflationary metric, or to have something that floats. But for us, security was a big issue, and it was one of the advantages that I could sell back to the organisation. But again, it's because it's a new build. It's an unsupported project, so it is a freestanding market economy project, which isn't reliant on CFD or government subsidisation.
I think the other point is we still haven't had the CFD auction. So although it was announced a long time ago that onshore wind and solar can bid into that, we still don't know when that's going to occur. And as Phil said, it's a competition as well, so you're not certain where you'll end up. So at the moment, generators in the UK can make the choice. They can wait and think about bidding in for a CFD, or they can crack on with contracting with a corporate and getting their site built out. So I think if you can secure a corporate power purchase agreement in the UK, that's the more certain route at the moment.
And I think that's why there's a lot of interest in this in China as well, because there's been a lot of projects which have been so heavily subsidized, and the subsidies are coming to an end. So looking forward at an environment where there are fewer government subsidies, private projects will need other ways of securing the project finance, and that's I guess what the opportunity there is moving forward. Are there other ways for Chinese corporates to get involved, and at this present time, do you think are there opportunities for Chinese corporates in Europe, for example?
Yes, I mean, actually, I came across a very interesting example even just earlier this week, where a Chinese corporate is setting up a car component factory in Eastern Europe. and they're planning to sell into the German car market. And one of the requirements of the German car maker is that these components are from a factory that is entirely sourced by renewable energy. So, you know, this is a great example of sort of supply chain sort of enforcement. You know, not just thinking about your own operations, but also about your suppliers' operations and encouraging them or lobbying them to become green. So this particular car component company, as I say, it's a Chinese company that's establishing a factory in Eastern Europe. That they sort of gave us a call and said, well, you know, what do we do? You know, it isn't in an established PPA market, so it's Eastern Europe isn't as established as Western Europe. Poland is probably the exception there. They've got quite a few corporate PPAs, but this other country, it's still fairly early days. So we're going to have to be quite imaginative in how we, you know, sort of enable that PPA. You know, there's the sort of finding a project for a start, and you know, when it's got to be a sort of merchant project that's sort of able to stand on its own 2 feet without a government subsidy, you know, that could be a challenge. But we think there are certainly wind projects in that country that could be viable. So that's certainly, you know, where we're seeing, you know, China corporations that are moving into Europe, or maybe already have you know, sites in Europe. I think a lot of them have either got targets themselves to go green, and RE100, Renewable Electricity 100, is a brand that some of you may be aware of, or their customers are forcing them to go green. So it's either their own target or it's a target being imposed on them. I'm sure corporate PPAs will be critical to get that scale again that we talk about to reach targets.
And for a Chinese corporate that was moving into Europe like that, I mean, where would they start looking for a supplier of a corporate PPA?
Difficult, really, because it's a nascent market in Eastern Europe, certainly where we're talking. If it's more in the sort of Western European countries, I mean, just to give you a feel for the countries that are sort of more developed in terms of corporate PPAs. So in Europe, probably the UK, Spain, and Nordics, I would say, are probably tier one. And if a corporate was looking for projects in those markets, it's definitely, I would say, it's probably a buyer's market. There's lots of supply of good projects that they could turn to. If it's in probably what I would call a sort of tier two corporate PPA market, like sort of Italy or Poland or Netherlands, there are some projects, but it's a bit more balanced, a bit more challenging. The economics are a bit maybe tighter. And then there are sort of the emerging corporate PPA markets, which include, surprisingly, you might think, the likes of France and Germany, which have obviously been very big in terms of renewables, but they've been still supporting projects with auctions, a bit like the CFD auction we mentioned earlier. So there's less requirement for some of these developers to have a corporate PPA. So those markets, France, Germany, and Ireland as well, are emerging. So I think it depends really very much where the corporate is entering, which country it's entering into, or is already present in, as to whether the PPA process is going to be easier or more difficult. I probably said enough, Natasha. You probably got more to.
It was exactly right. I think you've covered the jurisdictions really, really well. I thought it was worth maybe picking up on one point Phil mentioned, which is really important, and that's Phil mentioned about supply chain and reducing your emissions because you're part of a corporate's supply chain, and his example is what we're finding more and more now. So there are things to reduce your emissions. You need to look at your scope 1, your scope 2, and your scope 3 emissions. So if you look at many of the global corporates, they've signed up to what's known as science-based targets, so to reduce their emissions by in certain ways, by certain times, and then measured on that, and they report it externally. Now, once they've looked at the emissions that they control directly, so that's the scope 1, and then it's their power in scope 2. So scope 2 emissions cover your corporate power purchase agreements. Actually, scope 3, then they need to look at their supply chain. So if they want to become net zero, or reduce their emissions by a certain amount, and they've done everything they can, they will then look at their supply chain and say, we need you to become more green. We need you to reduce our emissions because you're causing me not to meet my targets. So it then becomes a business driver. So if you're in that supply chain, and clearly many of the, many components and supply chain, there are Chinese entities involved in a lot of the manufacturing across a variety of different industries. Their clients will ultimately turn to them and require them to reduce their emissions. So it becomes actually a winning business. In order to stay in business and win business, you're going to need to reduce your own emissions as well. And I think that's a really important fact, because we're seeing that move now to really pushing this down people's supply chain.
James, I think you wanted to come in there.
Sorry, that was a finger error.
Oh, okay, no
well, actually, James, I've got a good one for you then, James. So, I mean, the question, I've just seen a question come through: how to find a PPA supplier. So obviously, when you were looking at getting a corporate PPA, how did you go out to market and find the right developer and the right project? How did that process work for you?
It's a really good question, actually, because obviously this is a very specialist market. The average corporate, even if you have an energy or procurement specialist, and it's unlikely to have familiarity and an established network in that area. So what we did is we went out to a number of consultants. So we started tapping into our network, and that's what brought us actually to EY. So what we wanted to do was to tap into some expertise with someone who'd got a broad market view rather than a single supplier route. So we took a number of routes. We spoke to a number of consultants who specialise in the area, which are at quite a small number. And we spoke to some of the suppliers direct as well. So we did some market research to see what was out there, what was attractive to the supplier side of things. And we did identify a number of buying platforms, but really, the intelligence that we got earlier on was from consultants who have that kind of broader network. And that was really important for us in helping to make the decision and develop this game.
And James, you ran an auction. You got lots of bidders in effect to bid in projects, didn't you? So you were able to select the right one.
That's right. It was important for us to define what we wanted earlier on, because it's a very broad market. So what we had to do was kind of refine that. So we needed to decide what size project we wanted, how flexible we could be on that, the period that we wanted to start. And again, we needed some flexibility on that. We needed a time window, and we needed to make some decisions around whether it was, a physical PPA, a new build, or a virtual. So defining those parameters was quite an important part of progressing that. We then went out to the market, brought in a number of bids, and refined that down. That process took some time, but it's definitely worth front-end market research, defining what's right for your organisation. It's a very bespoke process, I would say.
Thanks, James. We've got a few questions coming through the Q&A there. Is there a further potential income stream from carbon offsetting from international renewable generation projects? How does carbon offsetting tie in with PPAs? You've spoken a little bit about ensuring the supply chain.
Phil, I've heard you tackle this issue before, Phil, but so I don't want to jump in. But Phil, do you want to go first?
Okay, I'll go first. Yeah, I don't mind.
I asked you this very same question on the podcast we just did.
Yes, indeed. Thank you. Yeah, it is a good question, and I think it's really important that we don't sort of get confused about sort of renewable energy targets and carbon reduction targets. Obviously, there is a significant overlap, But I think one of the points that Natasha mentioned earlier about different scopes of greenhouse gas emissions. So scope 1 is what we call is emissions on site, that you actually emit from, say, burning fossil fuels. So that's scope 1. It tends to be around heat mostly, and it's very hard to convert. It's harder to convert those heating to renewables, and often corporates will need to buy offsets to offset those emissions. Scope 2 is primarily electricity that's sort of imported onto a site and consumed. So it's in effect somebody else's consumption, but you're somebody else's generation, but you're consuming on site. And that's scope 2, and that's where PPAs really sit in and work. Scope 3 is the supply chain aspects that Natasha mentioned earlier, what your suppliers' emissions are doing, or what your customers or even employees are doing. But I think in terms of offsetting from a sort of PPAs themselves. So if you're a corporate and you've signed up to a PPA, typically you will size that PPA on your own scope 2 consumption, your own scope 2 emissions. And so you will in effect take the renewable energy certificates and retire them at source. You won't be selling them as such. However, you could potentially oversize your PPA, and then those extra certificates that you've got, you could either provide to your supply chain or your employees or your customers, or you could, get an income stream from them. I mean, particularly in Europe, where the GOs, the guarantee of origin certificates, have quite a traded market, you could potentially sell them to other people within that same market so that they can offset their emissions. But generally corporates don't go into PPAs to sell the GOs or the guarantees of origin. They tend to take them for themselves, and as I say, maybe use them a little bit in their supply chain, but mostly around their scope 2 emissions. So I think that there are some projects that maybe developers or investors might go into where they're seeking to get a revenue stream from these certificates, but it's not a very bankable revenue stream. The price of renewable certificates is very volatile. It's not like it's even more volatile than power, so it's often not sort of counted very strongly in the financial models. So it's not a very certain revenue stream, should we say. I don't know, Natasha, do you want to expand on that?
I think you've covered it really well, Phil. So I think the other point about it is certificates are not actually that highly priced as well. So they're quite low value. So banks don't take them into their base case usually.
Yeah.
We've had a question in Chinese there, and it's asking whether or not if you've already signed a synthetic PPA. If you're a corporate that's already signed up for a synthetic PPA, would you still be required to pay for electricity that's coming off the grid from the market? Sorry, would you still need to buy electricity from the market?
Yes. That's correct, because the synthetic PPA is not a contract to buy power, it's a financial agreement, so the corporate would still need to buy from the market.
And on top of that, they're sort of connected in the sense that the contract for difference is on it's as described earlier, it's the difference between a floating market price and the fixed PPA strike price. So what you want to try and do is in your agreement, your retail supply agreement, where actually you're buying the physical power from your utility, you want to try and buy that power in the same way that you're settling your virtual PPA, because then they work together as a hedge. Take for example, say power prices are higher than your strike price, and the developer will be paying you that difference. That difference will offset then the higher prices you're paying in your retail supply agreement. And the flip side is when the market price is low and you're paying the developer in your PPA, you're also making savings in your retail supply agreement. So they offset each other, because you're saving from the low price in your retail supply agreement. So yes, you still need this separate retail supply contract, but you need to, if you want it to work together as a hedge, then you need to make sure that you're buying your retail power in a similar manner to how you're settling your financial PPA.
That's great, thank you. James, you had your hand up very briefly. Was that intentional?
It wasn't actually, but just to add to Phil's point, I think actually that was a really important part for us as well. So although we have a physical PPA, the integration of that with a retail deal was also quite important to make sure that we had that trade back facility. So I think a PPA, while it makes a massive contribution, is always going to be complemented or supplemented by a retail agreement.
James, could I also just add, because I'm conscious of time and lots of questions coming through, we've got a podcast which is available on iTunes or Spotify or any of the more common ones called The Climate Transition. And I've interviewed Phil as part of one of the episodes. So if anyone wants to learn more about corporate PPAs, it's free. You just need to subscribe to The Climate Transition, and there's a session where I interview Phil on more detail of these questions for about 40 minutes. There are already 2 episodes released, and the corporate PPA episode will be released in another 2 weeks. So if we don't get to all these questions.
That's great, Natasha, and there'll also be a recording of this session made available to those that missed some of today's session. There's another couple of questions in there. I mean, we talked about the scale of the market earlier. Phil talked about how that varies both in terms of size of contract and also duration of contract. There's a question here about what the buying platforms are, and I'm not sure if exactly what that's alluding to. There is no single trading hub for PPAs in Europe, is there, Phil? I mean,
no, there's a variety of very much a variety of buying platforms. How corporate wants to procure their PPAs, they can either go to use a specific sort of platform from a broker, which will have a certain number of developers and projects listed on it, and the way we work at EY is we're completely independent. We go to sort of any developers, as it were, throw the net as wide as we need to, and then find the projects that are suitable for the developer. So there are different ways of approaching finding or originating a PPA, and certainly different corporates have different ways of doing that. I think in terms of the scale of the market, it's an interesting question around if we think that the corporate PPAs, I think Natasha said she did her first in 2010 or something. I think you beat me by about 3 years there, Natasha. But I mean, it was almost nil. In the UK and Europe in about 2013, there were virtually 0 corporate PPAs. Last year, there were about 10 gigawatts of PPAs in Europe alone, which is now similar to the US. The US grew a lot earlier. For the latest stats, it looked like the scale of the market is probably going to double over the next 3 years, as in almost doubling each year. I mean, it's growing that fast. It's on its sort of really quick. I'm sure it'll level out at some point, but we're certainly in the fast growth stage that the US had, say, around 2015 to 2017. We're at that point now, and even with the COVID crisis and pandemic, the market hasn't really slowed down much. These sort of higher drivers of sustainability and COP26 and the climate crisis, all of these are sort of making all of this the market grow very fast.
Thanks for that, Phil. Natasha, did you want to come in? Probably just a final comment, really.
Well, I saw one of the other questions. I think there was a question saying, is the PPA the only contract between the investor and the supplier? So I was just going to pick up, it's the main contract. However, the supplier will also enter into what's called a direct agreement with any lenders lending to the investors, and that is pretty standard. If you enter into a physical PPA, there's a risk called balancing risk. How do you balance the power that gets put on the grid? Sometimes if that balancing risk is kept by the generator then needs to enter into what's called a balancing service agreement. So the investor would enter into that as well.
Thanks for picking up that question as well, Natasha. We're basically come up against time. Thank you, James, Phil, and Natasha, for your time this morning. It's been a really interesting discussion for me. I think it's an area where there's on various different angles, whether it's Western multinationals with a supply chain in China where they need to ensure green credentials for their facilities over there. There's scope for using PPAs in the future, perhaps, and then for Chinese corporates coming the other way, it looks like that's already underway. And I think there's also been a lot of our audience from the Chinese energy sector, developers who might have assets in the European energy sector, and so they might be getting involved with PPAs already or in the future as generators. So China is certainly relevant in all different aspects. Yeah, thanks again, everybody. Jiawei, could you bring up the holding slides, please? I just wanted to share the fact that CBBC is pulling together a report in advance of COP26 and beyond called Targeting Net Zero. What role is there for UK and Chinese business in supporting our governments hitting these ambitious targets? We're now looking for case studies for UK and Chinese corporates who have been pursuing their own green agenda. So please do get in touch with me if you've got any case studies that you'd like to be considered for inclusion in that report. And the next slide is just a few, if you could change slide, please, of just a few upcoming events. Jiawei, could you change onto the next slide, please? There you go. A few more upcoming events. Next week, we've got another webinar for members in China, the first of a series called ESG Matters, looking at China's carbon market and green finance updates. So please check that out on our website. We've also got China Bookmark, the series of conversations with authors on books about China. We've got Lila Sang and Karl Ulrich, Winning in China. Then we've got CB Insights and When the UK Relations Go Viral, What Do China's Consumers and Diplomats Want, on the 20th of May. And on the 21st of May, those of you who are actually based in China, we are leading a delegation with the UK government out to Expo Central China 2021 in Taiyuan, one of China's coal capitals. But it leaves me to wrap us up for today. Thank you all for joining. Thank you again, Phil, Natasha, and James. And any further questions and follow-ups, please just do direct them to us. And thank you to DLA Piper again for partnering with us today on this. So thanks very much. That's a wrap.
Thank you.
Thank you. Bye.